So let me declare war against anyone that wants to maintain old legacy systems to keep their privileged position. That's my war. So my name is Nunes. I'm co-founder and CEO of Gnosis Pay, which is the first decentralized payment network. So my background is in payments. I've been in this industry for 15 years, so I'm old. What I've been seeing in the industry is the need for separating who owns the information. So initiatives like open banking, initiatives like GDPR, PSD2, PSD3, and so on, or equivalents in multiple places around the globe, are basically regulators and the banking industry trying to help people to navigate in a more competitive financial environment, right? So you're not stuck with an old bank or an old banker posing you tons of non-attractive financial products because you cannot move elsewhere with your data, and therefore you struggle. So we were born from that problem, essentially saying, well, with blockchain, the data is yours, or the data is public and carried throughout everything you do. So if you do a transaction here, or in Brazil, or in Thailand, that transaction will remain there. And that will describe what happened with the origin and the endpoint throughout the time. So that said, Gnosis Pay effectively created a payment mechanism that allows users to take decentralized, balanced, or funds out of a decentralized account and spend all the way to point of sale, and without anyone actually doing custody in the meantime. Secondly, we separate bankers from banking. Bankers effectively are service providers of asset management or treasury management. Banking is the right of every human being to effectively move funds under rules and restrictions of the different nations around the globe. And third, we basically do this with a known party or unknown party, making sure that we respect the rules of a certain given country or economy.
So you mentioned that you operate in different countries, or it's a decentralized system. What are the major challenges associated with creating a decentralized payment network?
What we had, I think it was the most difficult part. I think now we're leaving the good part, which will probably come new challenges. But I would say first, perception. Let's say somebody sanctioned, and then what would the bank do? Freeze assets until that person is no longer sanctioned. In a decentralized network, you cannot freeze assets, but you can freeze the access to the off-ramp. Meaning, if I basically stop you from off-ramping in all over the world, your assets are frozen with you until you sorted out your own problem. So explaining this without sounding dodgy and making everybody understand, it was quite challenging, especially to regulators, because in my view, regulators should protect the households and the families, not by participating, but rather making sure that the parties that are participating in a payment network or the banking industry or whatever respect rules of engagement. And I feel like the banking world back in the days, or the banking as it was created, they have a double role, which is conflicting. I am in the custody of your assets, and I will tell you how you can access your assets. That's very conflicting. So I think those 2 points were probably the most difficult aspects to navigate. And then you have different countries, different languages, different regulations. Gnosis Pay is officially in UK and EEA as well, issuing cards. But now 10 new countries we have just announced in DAPCOM. So Brazil, Argentina, Mexico, Thailand, Philippines, Hong Kong, Singapore, Japan. If I'm not forgetting anything. So we are operating globally, and therefore we have to address and accommodate the different perceptions on regulation. But effectively what happens as an outcome at the end, always, it has been till now, is that we're able to show the difference between banking and bankers.
And before we dive deeper into that, I want to ask you what your main reasoning for partnering with a company like Visa was.
You have 130 million merchants already connected internet network. In my view, allow me to use an analogy. Skype revolutionized, I don't know if it's proper English word, but reinvented phone calls. Every phone call that we do today is voice over IP because of Skype. Skype has not imposed voice over IP compared to any other technology. In fact, what they did initially, I had a Skype in and a Skype out account where I had a phone call, a phone number or a landline number that my parents would call me in a different country, and it would ring in my computer. And then I had a Palm, not even a BlackBerry or an iPhone, where I download Skype, and then my parents would call that landline number. It would ring my app in my Palm, and I would answer. And every time I'd made phone calls, I would go with my Skype out credits to buy calls for domestic conversations in different countries. That entire thing was voice over IP, very dodgy, a lot of steps to get to voice over IP. And they basically went from that very complex to a new world where every call is from voice over. Did we remove all telcos because of that? No. Telcos went from selling minutes to selling data, to selling megabytes. Did we kill the phone providers? No. BlackBerry lost its relevance because they did not understand the future of phones or what a phone is. In my view, it's exactly the same with what we're doing. Why Visa? Visa has 130 million merchants in one hand. Visa has maybe billion of customers or billions of customers on the other spectrum. Why reinventing the wheel if the problem is using legacy system, and our fight is against the legacy system first. Once we bring the new system, then we can basically say, hey, there's also new players for the new system. Are the banks doing what they're supposed to do? Are the Web3 wallet providers doing what they're supposed to do? And I think that is where the new world is going. So we see our role as that.
Very clear. I want to ask you, just briefly, could you run me through the user journey and what exactly the process that powers the system behind the scenes, so to speak, that allows me to pay directly using a crypto wallet, for example?
Yeah, so effectively you can bridge your assets into what we call a spending account or checkings account for Americans. So our card is basically connected to a on-chain checkings account or a spending account. And then you can bring assets, stablecoin assets, to that account, and that stablecoin is going to be linked to your card. And every time you transact in the point of sale, well, we're going to send an authorization and see if you have the funds, and then authorize against the funds that you have in that account. It's 100% under your custody, and the moment you are tapping or inserting with a password in the point of sale, that means you are signing a blockchain transaction for that funds to move to the next party responsible for that funds. So you are going to send, without having to do a second step, to Visa via a third party, which is the issuer. And then Visa is going to settle with the next party and the next party and the next party, which is the acquirer and the merchant and so on.
That was kind of going to be my next question. What is the blockchain component in that system that you're describing?
So we have, the news that we had last week was about the partnership with Visa. The news that we're going to have next is about how do we settle in stables all the way to the acquirer, which is the party just before the merchant.
Can you share us a bit of a sneak preview of that if it's next week's news?
We're getting there. We're definitely going to talk to you guys. But that is a very important element, which means rather than taking so what happens today is you take digital assets or stables, we convert them into fiat, we deposit those fiat into the issuer, which is the party that gives the card to the user, and then the issuer pays the Visa, and then Visa pays the acquirer, and then the acquirer pays the merchant. The way we're doing is you're taking the stables as user, you pay directly Visa from that stable to that point. That reduces tremendous cost behind the scenes that people don't know.
I think you've answered my next question there as well. I saw on your website that you have no transaction fees, no exchange fees, or even off-ramp fees. So, the natural question that emerges from that is, well, how does it make business sense, economic sense, to run that system without any fees?
We are a payment business. We make a fee out of every transaction that happens in the payment spectrum. So that 2, 3, 5% that you see at the point of sale, it's normally split into 3 parties, roughly, and there's a bunch of granular splits in between. Apple takes a bit, and many parties in between takes a bit. But effectively, you're saying the payment scheme gets a fee, the acquirer gets a fee, the issuer gets a fee. We provide the technology to the issuer, we get a part of the fee from the issuer. So there's no incremental fee. So for the user, we have launched a bank account, which the card access DeFi balances in stable, and then every 100 euro C, every 100 euro E, every 100 USDC is 100 USDC in the card, and you can spend 100 USDC in the point of sale. And the money in the business goes the other way around, because that transaction will cost 2, 3, 5% to the merchant, and then we get a piece of that, so the user never pays.
Clear.
At least not directly.
I understand. So anonymity is obviously an important component of services for many crypto native people, and I'm curious, does your partnership with Visa, does it create any issues for crypto natives in terms of privacy or anonymity?
Thank you for asking that question, because I recently read a post where somebody started making a bunch of comments around privacy. In fact, privacy is resolved. It's not deployed. What do I mean with that? What do we need privacy on? The blockchain address and the card data, they're linked. That's personal information from the users that cannot be explicitly reviewed. So every time you're transacting in a point of sale, a blockchain with 100 numbers spend 5 euros in the point of sale. Can that information be public, yes or no? Today it can. If we want to make that private, you can always deploy a layer 2 with rules around how to access that information. So rest assured that privacy is not the problem. I think making your card data and the blockchain connected makes your transactions visible to everyone. Do you want that, yes or no? I don't think so, and I think people should be careful about it. And I don't think we have a greater solution than the existing in the world today. If your data, if somebody takes a picture of your card and spend it online, it's equivalent. It's equivalent vulnerability. So I don't think we have a privacy problem. I think we have a maturity stage of, do we need to enhance, how do we hide transactions?
I understand. Just before we move on to some sort of more generic questions, I'm curious, you mentioned an update, an announcement that you're sort of holding back on for next week. Is there anything you can share with us about the near future? Any exciting
No,
updates?
so I think the collaboration with Visa is not what normally it seems to everyone. I think Visa did a tremendous step to help the Web3 community via us, because what happens is any wallet out there that contact us can have their own card, and it's displayed MetaMask, Ethereum, Zio, whatever, and you then have an off-ramp instrument to transact in the point of sale against funds that are sitting or displayed in anyone's wallet. Effectively, we're making, together with Visa, every Web3 wallet a bank or banking. And I think that's what we're going to elaborate further. Asset management or centralized programs that will have tons of rules and regulations on how do you control funds for third party. We're trying to solve the other element.
Understood.
The railways.
Understood. I want to zoom back into where we are right now and quickly ask you, what brings you to Amsterdam?
Okay, cool. So we have basically deployed the card. The card is fully functioning. We slowly gave it away just to test the product as much as possible. The card has a blockchain address where you can basically have your digital assets sitting on it. The card also have an IBAN now, so you can move fiat money to that IBAN, and immediately you're going to display digital asset balances in EuroE. We're integrating more native stables, so that's probably something cool that we're going to announce soon as well. So then we become, more friendly to use it everywhere. And we are in UK, and we are in EEA, and we're now in these 10 new countries. So if you are one party from one of those countries, you should go to gnosispay.com and then, onboard, order your card, get your card, and start transacting. And this is probably your best, and I've seen a lot, so I risk to have this on tape, that we have the best FX multi-currency card in the world at the moment. So if you hold EuroEs and you spend in dollars, and if you hold EuroEs and you spend in any currency out there, you probably have the best card FX, better than Revolut, sorry. And I've compared many times.
I'll take your word for it. We're at Money 2020. You mentioned it's not your first time at this conference?
No. I've been in this conference since day one, which makes me very old. Again, sorry to freezing that. It's a really cool event. Gnosis is, as a Web3 player now, for the first time in Money 2020, it's quite interesting because you see a lot of people talking about Web3, which is, in my view, that's the fight we want to win. Everybody should be talking about blockchain, should be talking about Web3. It is a technology that is mature enough and ready to scale. And I think we need to start using the technology to kill as much inefficiency as possible. It cannot be that in the year of 2024, we still talk about COBOL and mainframe. Sorry, IBM. But it's not possible. So being here and seeing a bunch of colleagues that I met, like I mentioned in the beginning, feels like a high school reunion. It's amazing because I see like how we can help a bunch of them. We created a product that is hybrid. A regular bank can call us today and they can issue the Gnosis Pay card. And if they want to offer better FX using the blockchain technology, they can, without mixing with the traditional ledger.
It's maybe a bit of a tricky question to answer, but you mentioned we need to iron out some of the inefficiencies, is I think, I'm paraphrasing what you just said, but
yes.
There's a lot of companies, and you mentioned IBM, one of them, a lot of large enterprises working on either enterprise blockchain solutions or similar projects, but here at Money 2020, there's also a lot of financial institutions that benefit from some of those inefficiencies, perhaps, that profit from some of the intermediation that happens with cross-border payments, etc. Have you had some interesting conversations with other companies here about?
So let me declare war against anyone that wants to maintain old legacy systems to keep their privileged position. That's my war. I don't believe I've ever met any bank that wants to maintain mainframe to keep their position. I think they want to maintain their regulatory position and regulatory custody, and therefore he is my customer. And hopefully he will contact us to talk about business. Mainframe was defined in 1959. With application in over 144 countries in this entire language, was in 1966 widely implemented. In 1977 SWIFT and Visa base 1 base 2 standards. So we're 2025, we're asking an iPhone, hey iPhone, you want to do a payment transaction? Please talk to Talkable and mainframe. Otherwise, you can't. Every single human in the world is losing as consequence of this decision. And it's very difficult to tell a banker, put at risk the mamas and the papas' money and replace all your back-end system for this new thing, where you don't understand and it's not clear to you. So when you kind of go from that angle, like I'm not here to put you at risk, I'm here to kind of tell you if we start from this angle, you can actually slowly migrate to the new ledger, which is on-chain. And there's many ways to do this in a good way. So conversations I've been having this morning, it was all around how can this traditional dummy debit card help me to migrate to blockchain? And then I scope, I say, look, it's an account that basically talks to your traditional ledger whenever the user is paying domestic transactions. And you do your entire accounting management as you do today. The moment they go abroad, you activate, please use funds sitting in the blockchain rather than my account. But instead of funding prior to the transaction, you only fund after you authorize the transaction. So instead of moving funds through the SWIFT and all the 15 aggregators, you basically, at the moment you decide to make the transaction where the money is no longer belonging to your user and to your custody, then you deposit on-chain, and then on-chain you send to Visa, Visa to everybody else. So slowly you enabled a much cheaper ecosystem where you can profit from as a bank, or you can decide to send that profit to your user, and that's up to you. I don't think that's up to us right now to solve it. So it's a slow migration.
This migration that you're describing, what are the specific or other most pressing issues that the industry faces in that migration?
The misunderstanding and perceptions and ghosts around crypto.
Can you elaborate a little bit on that?
Blockchain and crypto are not the same thing. And I think there is so much misunderstanding, and hi, I'm doing blockchain. Like it's almost like I feel like I'm a vampire and coming closer to them. So, it doesn't matter if Bitcoin or Ethereum or those are choices that people will find the use cases and they will identify themselves. There will be different tribes out there. And like we have today, we have different banks providing different ways to attract customers. We have different companies providing different services to attract people. The world will always evolve, and you're always going to be more demanded as a business to fulfill local needs of consumers. Consumers are becoming more intelligent. But we now need to kind of go back to wipe this legacy without creating the risk. And I think we are at that moment right now. So it starts first by understanding blockchain is not crypto. You have different types of applications and you have different types of cryptos. You have different types of digital money. You have more the open loop concept. You will have more the closed loop concept. You have different terminologies. So first, moving away this ghost, these myths and this misunderstanding. Second, common language. In crypto, bridge means this. In Web 2, bridge means that. So kind of saying, well, actually what you guys saying here is this. So that true 2.5 language, I think that's another element. And then the third element is, as much as we have very knowledgeable people in the business world in a very mature industry, which is the payment ecosystem, we need those guys to migrate and understand now the new power of blockchain and what you can build on top of it. It's not about centralizing and hiding tech inside of your own house and running this black box inside of your house. And that culture, by the way, the banking culture, traditional, if ain't broken, don't fix. Migrating into technology is commodity. Patching things together defines a possibility of a business. Serving customers is actually your business. So that is where you're going to differentiate yourself. How are you going to serve?
I understand. And as we see this sort of increasing convergence of TradFi and crypto, I know you mentioned blockchain isn't crypto. Do you see it as a threat or an opportunity for the current giant financial institutions?
Tremendous opportunity. I think once they see, it's really funny. What I see in both worlds after learning so much about, so my co-founder is of course a true Web3, my co-founders, they're true Web3 guys. They were the first one to deploy the first node in Ethereum. They were early adopters of Bitcoin. They made probably the beginning of their wealth in Bitcoin. So they're true, like genuine fighters of a new world using Web3. And I consider myself exactly the same, but from a different angle. People should have options. We should not tell people you have to do Web3. I think Web3 is doing tremendously good stuff. Web2 has evolved and is mature in many ways. Visa is a great example of a company that is connected to billion plus users and 130 million businesses all over the world. And you can trust that if it's a Visa product and you go to the merchant, it's going to work. So why would you trash that? Like, I want to kill Visa. No, I don't want to kill Visa. I want to make sure that we use Visa to enable this new world. And hopefully the world is going to want the new world. And then Visa needs to evolve their business model to address the new world. But trashing things would be, imagine if every time, in order the world to fix their problems, we had to atomic bomb everything and recreate. I mean, we're living a very interesting time when it comes to lack of tolerance and understanding different cultures. We don't need atomic bombs to learn about each other. We need to basically understand their differences and how do we build on top of them and how do we respect them. And that's it.
Clear. I want to ask you about tokenization. It's a bit of a hot topic, exactly. And when we think about the tokenization of real-world assets, or crypto natives call it RWAs, what are your thoughts on its impact on traditional financial institutions on the one hand, and the crypto industry on the other hand?
So the beauty of crypto isolating themselves in an island, in my view, and building tech, they were capable of doing really good stuff. Like very intelligent people creating a bunch of stuff. And the fact that they were isolated from the real world, they kind of reinvented a bunch of stuff that the banking or the bankers were doing as a means to build their own offers. I am the believer of the thesis banking 3.0, where you separate bankers from banking. Bankers are under attack. They used to do a lot of returns with people's money and providing very little back and below the value of lifetime, right? Because the inflation, people's personal inflation is very often bigger than the average inflation, right? So you're giving little and you're getting a lot out of it. Web3 created mechanisms to distribute this in a more democratized and more intelligent, maybe, but at the same time, without the maturity of the risks that the bankers have learned multiple years. I think regulators understand now, and I think the main conflict that we need to resolve is not the how they're doing. I think the way they're doing it seems very solid, is the responsibility of applying tech and the custodial. And what do I mean with that specifically is, if you're providing real world asset token, the tech, to connect the real world asset so somebody can do something with it, that's one way of looking. So you need to be the gatekeeper, that you're not doing this to terrorists. And you have the other part of it, which is I am taking the responsibility on behalf of someone's money. I'm taking the responsibility on behalf of someone to do something with that real world asset and then trade and make returns and then share returns back. And for both cases, by the way, we have sufficient regulation, and I don't think we need to reinvent the wheel. We need to start calling the right names to the things that are happening. So I see banks under threat, bankers under threat, and I see that the Web3 guys have developed some really sophisticated, great instruments that back in the days you needed Panama paper company in order to have it as a wealthy individual. Now anyone can have it. While my money is sitting in my bank account, I get yield. Yeah, nobody could have that before. And by the way, when you get that yield, you spend with the Gnosis Pay card. So you needed to have a savings account in a bank, and there was very little yield, and yeah.
And here we are. We've certainly come a long way. Just a second ago, you mentioned the word regulation, so I have to grill you on that. I'm curious what your perspective is on the politicization of crypto in the US. Now we're a little bit sort of in the election cycle, and the ETPs, specifically the Ethereum ETF, got passed rather rapidly, faster than a lot of people expected. And we were in Austin for Consensus last week. One of the main criticisms of crypto native people was that they're a little bit cynical and they think crypto is being too politicized. I'm curious, so you operate in the European Union and also in Britain, you said, and 10 other countries. Do you think this politicization of crypto is going to come to Europe? Or do you think we have mature enough regulations to prevent something like that?
Now let me use my old hat. Europe is famous for basically regulating before, developing. US is more famous about let it collapse and then we fix it. Which means from a tech perspective, US is slightly better because it allows you to go a little bit beyond, example FTX, and then you say, whoa, we have to fix it. And probably Europe, you don't have those way too big problems. They kind of have a MiCA regulation, a GDPR regulation, and an e-money regulation. So you have all things, kind of a payment service provider and a payment initiator. They have so many names for so many stuff that we get confused. Like, if something. So, US. Our card functions in the US. Why I want to start from that point? Because we have stable sitting in a Visa card, and you have a network in the US, and you have merchants that accept Visa, and therefore you accept my card. And they get paid in US dollars. Okay. That means our users, when spending in the US against the law, the ones that do not live in the US, no. So in one hand, we have addressed regulation sufficiently to allow this to happen. On the other hand, governments depend on banks because they are the buyers of the bonds, which are the instruments that allowed governments to evolve. Then the banks are under threat because there's this new group that allowed very sophisticated banking to now be available to anyone. And it's becoming easier and easier and easier to have access. I think people are just reacting out of fear. The entire politicization, it's very interesting because Donald Trump probably 5 years ago in the crypto community was more hated than loved. If you're now in 2024, you're heavily Donald Trump because Joe Biden sanctioned, the most democratized answer, right? I mean, what happened there was Republicans and Democrats decided how to pass the bill forward for crypto, and then Joe Biden decided to say no to it. So, in my view, like there's so many things going on. I don't take it specifically to crypto. I think the world is crashing, and because information was a lot more controlled and a lot more centralized to people. Now we have any individual have a voice. A bunch of narratives have a. Michael Moore, I think was his name, right? The guy that was always creating this crazy theories about stuff. There was one guy, and he could only access media, which was like CNN or Fox. Nowadays, you have millions of Michael Moores in YouTube telling what they think, or maybe having evidences of how governments are not functioning anymore. And I think that democracy is at check. And so I don't think the problem in the politics is directly related to crypto. I think it's influencing heavily the crypto users and the crypto community. But because also the founding pot came from banks, and the crypto community is attacking banks. And hopefully I could express this. It's a very complex question, but if it would be a world without YouTube and X, and I'm pretty certain that Web3 would be already a lot further. That's how I look at this. It's because there is this sense that Web3 will kill the banks. Bank will exist for my dad. Bank is not creating the relevance to deal with my kids. My kids probably would trust a lot more Apple than the bank. So that says something about the life of a bank or banker.
You're touching on a very interesting topic here. You think Web3 would have been more broadly adopted if social media didn't exist in the way that it does? Because there's this sense that Web3 or crypto or DeFi is going to replace banks, but you don't think that's the case?
I definitely think Web3 will put the banks in a further check, right? Let me be, that's a very, is something I love this topic. I can talk about this for hours. But think like this. Web3 is evolving technology. Banks are use cases. And Web3 can basically easily serve banks. Because Web3 leaves open doors for banks not to centralize and to control, that's where things collapse. But even that, you can create a bunch of agreements that you wouldn't have an issue, right? So let's say you have a private layer 2, you have a closed loop network. So even that you can kind of find room for one another. But because we live in a time where you have open media and we lost trust in democracy, if I ask all my friends, do you trust what you hear on TV? It's 100% no. And I was raised on Fridays or Sundays specifically. There's the 8 p.m. news until 10 p.m. that you kind of have the sum of the week, what happened, or the investigation about a murder, or the most successful businessman. That was really cool. It was shaping how we fought. And luckily, we have social media. Luckily, we have now different voices. And because the entire establishment cannot control this, and they could, this created a shock. So the Web3 and the bank could have lived together in a world where bank had the feeling they could control. But because the establishment now is under attack, there's zero trust in every party. So if a Web3 guy goes talk to a bank, it's like, no, I don't trust you. And this is basically how we're collapsing everything. So it's just that everything happened at the same time, which is great.
It makes for a great conversation. That's certain. I'm curious, just very briefly, do you think then DeFi has the potential to replace TradFi in some sense?
No, I think DeFi is an option. I personally would love that DeFi replace TradFi, because that means as a human being, I have assets that I used to put under my mattress. Like my grandpa probably put a lot of money under his mattress as the most secure mechanism to store money. And now I can do this digitally, and I can spend, I can transfer, I can buy and do whatever without having to have physical movement of cash. So I would love to have this as everybody is sophisticated enough not to be dependent on anyone. But I don't believe the world, because maybe another angle to this, very simple. I know you sell whatever, you're a supermarket. I still use Visa to go to the supermarket. Oh, but you could also use MetaMask. Yeah, but then it will be MetaMask relationship with me. And at one point, MetaMask will transform that relationship into something that you then will give something to MetaMask. So the world never had a two-party model. There always been three-party model. The one that wants to buy, the one that wants to sell, the one that wants to intermediate, to build trust. So TradFi will always be there, and it has been too granular. In a payment transaction, you have 12 participants, minimum, on average. 12 companies get a piece of every payment. The 3% out there, 12 companies will get a share of that. Why do you need 12 companies? Maybe it should be 3 again. So we should go back into 3, but then again, when you centralize, then you want to decentralize, and then you want to have 12 again. But the problem is everybody is not adding new things in terms of value, they're just adding cost, because the other one is too lazy to evolve. The bank is too lazy to learn about iPhone. So they hire an aggregator. That aggregator now became too big, and they need another aggregator then to talk to the iPhone. And then the next aggregator. And then Apple says, by the way, every time you're using the iPhone, you have to pay 50 basis points in a transaction, because that's the way I want to see the world. So it's really funny that we created such a big inefficiency. It's now time to clean it and let everybody reinvent their roles again.
And that's why you're here at Money 2020.
That's why I'm here. That's what I think we are creating that new path where we're welcoming every company from both sides. I am not here to say the banks are bad, the processors are bad, the issuers are bad, the acquirers are bad, the PSPs are bad. Everybody's welcome. We're bringing the card and it functions exactly the same for all of you. However, the one with the highest control can Darwin the next layer. So this card can help the banks to reduce friction and cost. And that will make that bank more competitive. That probably means 3-4 companies in between are gonna be, they're gonna have to reinvent themselves. Gnosis Pay, we wanna make sure that we talk to both worlds. We are the bridge to make sure TradFi and DeFi, can be used. I am building DeFi as an optionality, which I believe more people in the world will want, especially because they want to regain control in a lot of things. And I don't think they are knowledgeable enough to understand it yet, but I think it's becoming more and more available why you need to control your data and your funds. And hopefully that can be offered by service providers that today are centralizers, but they will see that they can also add value without having to own things they don't need to own. Back in the day, you kind of own it just because you don't know. Like, I don't know, let me just own it. Now that you evolve, you're gonna see that the role of a bank is to bring competitive offers to help local economies. Me as a businessman in a country, I need access to capital so I can generate jobs and produce more, pay taxes, not more taxes, but pay taxes. Those taxes then give better infrastructure so we can then hire more people. And so they should not know the data and use that against me. And I think that's the optionality that we can bring so we can help everybody to kind of reset, and then maybe the banks can be relevant to my kids. They have to do a lot of work.
Let's wait and see. It's been a pleasure talking to you. Thank you so much for being here.